Based on Fibonacci, it says based on this rally, based on the strength of the pullback, it's going to tell us where the upside targets for gold are. And so we can look forward and look above. Gold has the potential here to run to $3,722, and it can go all the way up to about $4,100. So if we look at that, you can see that's a 20+% move. And this is a very similar thing we saw in 2007, meaning we could see it not only hit this target, but it could become the crowded trade short temporarily. And we see gold blast through and move up to, $4,500 or something huge. It could really have a big move at this point. So
in 2007, gold broke out just as stocks were reaching their peak. The S&P 500 sank nearly 20%, but gold surged more than 35%. Chris Vermeulen from the Technical Traders sees the same setup forming today. The charts, he says, are carving out a textbook bull flag. Gold futures have already punched through to fresh highs, but the real confirmation will come from physical gold ETFs like GLD. Until GLD clears about 175, the breakout isn't official. If that level is removed, Vermeulen expects gold to accelerate rapidly, first toward $3,722, then possibly $4,100. And if momentum really takes hold, overshooting to $4,500 isn't out of the question. The timing matters. In 2007, gold's breakout coincided with the start of a stock market unraveling. A similar correlation now could mean chaos in equities just as gold stages its next powerful leg higher. For investors watching the tape, this is the signal to track. Silver, meanwhile, remains the wild card. Its chart shows messy, explosive rallies followed by sharp collapses, all fueled by its smaller size and speculative flows. That volatility makes it harder to trade, but also more rewarding if you're on the right side of the move. In the near term, silver could reach $40. If sentiment heats up, a spike to $50 level seen before is very possible. The catch is speed. Silver's biggest moves often happen in just days. If you're not positioned ahead of time, the rally can leave you behind. For Vermeulen, the message is clear. Gold is setting up for a potentially historic run, and silver's window could slam open suddenly. The parallels to 2007 are impossible to ignore. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
You and I brought up this comparison chart of the S&P 500 in gold. Gold's the yellow line. This is 2007. The right-hand chart is where we are right now.
Right.
We've got the S&P 500. You and I brought this up last time we spoke a few months ago, and I talked about how this type of scenario, gold actually had an upside move, a measured move in 2007, just as the stock market was putting in a significant top, which I think is close to where we're at right now. Gold should have rallied 20%. Not only did it rally 20%, but it blew past it and went up 37%. And so right now we have a very similar chart pattern. Gold, if we flip back to the chart of gold, has this, I love to use Fibonacci extension, Fibonacci theory. If you don't know it, you have to look into it because it's in everything in the universe. But more or less, it tells us where the upside targets are. Now, based on Fibonacci, it says based on this rally, based on the strength of the pullback, it's going to tell us where the upside targets for gold are. And so we can look forward and look above. Gold has the potential here to run to $3,722, and it can go all the way up to about $4,100. So if we look at that, you can see that's a 20+% move. And this is a very similar thing we saw in 2007, meaning we could see it not only hit this target, but it could become the crowded trade short temporarily. And we see gold blast through and move up to, $4,500 or something huge. It could really have a big move at this point. So
Yeah.
I like gold. It has this giant bull flag pattern. I'm waiting for an extra, like a discretionary trade, just a side trade that if gold starts to break out to the upside, I want to get long and play this move because I think it'll be a very quick move. I think it'll be very strong to the upside. And if you compare what happened in 2007, if we were to just scroll forward,
Right.
we saw the stock market fall 20%, and we saw gold shoot up 37%. And I believe we could see something similar. If we were to fast forward this, we would see, the stock market potentially top out and start to sell off, and gold just keeps going higher and takes off. So that's an opportunity. This is a very rare type of setup that's unfolding. And I think one of the key things for, short-term traders is, if we look at the price of gold futures here, and I think this is very important for people to understand, is gold did break to some new all-time highs on the futures market, but that's not what I follow when it comes to trading gold for a trade. I like to look at any gold, physical gold ETF, GLD or whatever. If we zoom in on the chart price action, you can see we never did hit new all-time highs back when futures did. So I'm really looking for gold to break above, when GLD closes above 1750, more or less, I'll be like, okay, you know what? This is it. This bull flag is breaking out, and probably we got chaos in the stock market. This will be kind of that play for gold. So gold has got huge upside potential. And I think it'll bleed over to silver and miners as well. Yeah, I think the people who take physical gold are extremely savvy. They have a ton of cash because they're buying it. I think it's very smart to be loading up on physical gold because there's gonna, I think, eventually be a time, Daniela, when gold is shooting through the roof. Nobody can get their hands on physical gold. It'll be like impossible to get because anybody who has access to it is just buying it up. It's not even getting out to the public. I think getting your hands on it before, obviously, it rallies and potentially we're in a perfect storm for gold and silver to explode to the upside. Um, I think getting your hands on is important. That's what I do. I collect physical gold. I just store it. I keep stacking it. I think I don't really do gold for a trade. This
Right.
gold trade I just mentioned to you is like, I'll jump into an ETF. I'll play that move as a trade, but I do accumulate physical gold. I keep it stored away and I want to have it in hand. So people accumulating the physical, taking massive delivery, I think they're just really savvy investors saying, hey, if this does take off, they want to make sure they have it because a lot of people will want to buy it. And there's a lot of ways to buy gold and you actually don't really own it. There's a lot of different ways that it's done, that you might not actually be able to get it if you really did want it. And the whole world is all fighting. Silver is wild. It has a very ugly chart. It has a lot of noise, huge pops and drops, big rallies, big sell-offs. It's definitely more volatile. And I think that has to do with silver is a lot more of a speculative play. It's a smaller market, so it moves faster. Gold, I like because it's kind of the global barometer. It's the whole world gets nervous. When gold moves up, it means globally there's weakness and people around the world are seeing something bad happening on the horizon. And that's what the big chart of gold is pointing to is we're on the tip of something hitting the news, something that's going to change everything. I think that's what gold is warning us. But silver does have upside potential. I mean, it's in an uptrend. I think it could rally to short-term wise. The next upside target short-term is about $40.75. Not that high from where it is. But as you know, silver, when it does take off, it kind of just shoots and goes ballistic. If we were
Yeah.
to zoom way out on the chart, it can have these
I mean, look at that.
massive explosive moves. And it's really tough to gauge. Silver moves very quickly. If you blink, you can miss it. You kind of have to be sometimes just positioned in it and stomach the volatility. And then if that hits, then you're a part of it. But a lot of times some of these moves happen in 1 or 2 days, some of these big pops and drops. But when we look back on this chart, there is potential though. We see gold shoot higher and silver could go up and tag that, all-time high of $50. It could spike up to that level.
Yeah.
It would probably do similar to what we saw back in 2007. We saw silver. Let's just zoom in on that price action. In 2007, we saw just as the stock market really started to sell off, we saw silver shoot higher. Percentage-wise, on average, it moved up about 20% or so. And interestingly enough, the chart pattern for gold and silver right now, Daniela, is gold actually has more upside potential. It's the opposite of what you think. It's the opposite of what everyone else thinks. They naturally go to silver for the bigger gains. But for some reason, all of my chart patterns for silver, and even when you compare what happened kind of back over here, it has the same or less potential for some reason based on technical analysis than gold. So I like gold because it's stable and I think it's going to be a big move, but we'll just have to see how this unfolds. Obviously silver, if we were to go back, silver did have a pretty massive run from these lows. It was roughly the same, about 40% or more from like what gold did. Gold did about 37 as it broke and shot higher. And silver also did about 37 somewhat from the same time frame. So You kind of pick your poison, spread your money between both if you wanted to, right? I think gold to me is the ultimate tool of uncertainty, and it looks like it's about to pop and blow up to the upside. And um, yeah, I think we're on the cusp. I mean, a lot of people, we've all been expecting, I've been expecting a big market correction to come at any point. I'm not jumping in front of it and betting on a huge correction in the economy and the stock market. If it wants to keep going up, I'll follow the trends higher. But gold is just screaming. It's like something is about to break, something is wrong. People are moving away from real estate, they're moving away from the stock market, they're going into gold. And yeah, it's just telling us, just be cautious, right? It's kind of that warning sign. The gold miners they're doing well. They're outperforming gold. I mean, they have pushed up to some multi-year highs, while gold has just been flatlined sideways. That is a good sign. And silver miners have been doing the same thing. If we see gold miners leading the price of gold, it usually means gold will break out soon. And then usually we're going to see a very nice move in the whole precious metals space. Now, here's one of the other things. A lot of people want to move into miners to make more money, percentage-wise, just like they think silver has more upside. And while it may, if you go back and look at 2007 market top, gold had the biggest percentage move with the least amount of noise. Miners, because they're stuck in the stock market, when the stock market tide goes down, when there's mass selling in the stock market, because miners are stuck in the stock market, they do have selling pressure pulling on them. So they don't just float up and skyrocket and shoot higher like the beginning of a new bull market. They hold their ground and they grind their way higher, but they just don't take off like most people, I think, want them to. Gold is actually that better play. Silver is kind of the better play. Both of them outperformed miners in this particular scenario. Now, I think there's going to be a good time for miners. After we have some financial reset, I think miners will be the ultimate play for some huge moves. But that could be 6 months, 12 months, 2 years away before we go through a whole cycle and everything resets. So
Chris Vermeulen sees the current stock market setup as a near replay of last year. Back then, indexes rallied hard into the spring before selling off sharply in April, wiping out about 15% and dragging prices back to the lows. This year has the same look: a long rally, signs of exhaustion, and the possibility of another breakdown. If history repeats, the next move could be a drop of 20% or more from current levels. The challenge is that nobody can time the exact moment. Markets often grind higher, lulling investors into thinking the trend will never end, and then fall hard once the trigger arrives. That's why Vermeulen cautions against trying to nail tops and bottoms. Instead, he says, focus on price action. Ride the trend as long as it's intact, but be ready with a clear plan when it changes. That approach means staying long while the indexes hold up, but quickly recognizing when the rollover begins. The key is not getting caught frozen while the market shifts. For investors paying attention, the real opportunity lies elsewhere. Precious metals and mining stocks are already flashing strength. Gold, silver, and related equities are showing the kind of setups that often precede major moves higher. In Vermeulen's view, the stock market could still have room to climb, but the risk of a sharp correction is real. Positioning capital into assets with upside potential, like gold and silver, may be the smarter play as the cracks in equities widen. Let's get back to the interview.
you don't know if Bitcoin is going to move with the stock market or act against it. And that's one of the problems with trading like gold and silver mining stocks is sometimes it rallies with the stock market, and then other times gold miners will, when the stock market falls, the gold miners will shoot and take off. So there's
Right.
always, you don't know when they're going to disconnect and go the opposite direction. And I find Bitcoin has been disconnecting a little bit more over the past month, where the stock market goes down, Bitcoin goes up, or vice versa. So I don't know. Obviously, Bitcoin's talked about as like the digital gold. It definitely plays that role for certain people, and it has that movement at times. I don't know how it's going to move. I think because it got sucked into the futures market, the Bitcoin itself, it's now kind of tied in with the ebbs and flows of investors either buying or selling stocks and equities, that same group of people. So that's why I think we see Bitcoin moving a lot more with the stock market, because it's the same group of people feeling bullish and buying stuff or panicking and dumping shares or whatever. Who knows how quickly something can crash? I mean, that's pretty short. That's a really quick time frame. I would think it would take at least like 8, 12, 18 months, if not longer. I mean, we have no idea how something's going to crash, but we do know things can be pretty precipitous and fall.
And you're certain of it.
No, there's no certainty in the stock market.
No, but you're certain of a
I'm not
reset.
going to say 100% this is falling. I'm just saying you need a game plan for when it happens. I'm certain there will be a financial crash at some point, but for all we know, it could be 50% higher from here and it corrects down to where we are right now. So there's always going to be massive market corrections and financial resets as things blow up. But you don't know when. And that's what sets what I do very apart, different from everyone else is I don't try and time the markets. I have thoughts and feelings of what I think is unhappening and what the charts are showing, but I follow price. I just ride the coattails of the markets. I'm not trying to buy a bottom or pick a top. I just let the trends run and I follow that trend. And it's so much easier to follow something than it is to try to, predict where it's going to turn next, right? And that's the
Absolutely.
game changer. Is just follow price and have a strategy. If it keeps going up, you know what to do. If it rolls over, you know what that looks like and when to change positions. We're definitely at a huge um, point in the economy where I think we could still see the stock market rally higher for a little while. I think the market is trying to the Magnificent Seven is doing most of the heavy lifting, although in the last couple of days we've seen some big selling in the Mag 7. I think going into the news of Jackson Hole, people are getting nervous about big tech. But overall, the Magnificent Seven have been dragging the stock market higher. And if you kind of peel back the layer of the Magnificent Seven and look at the general market, I like to look at RSP, which is an ETF. It's equal weighted S&P 500. I like to look at the Russell 2000, which is IWM, and the IWC, which are the micro caps. And if you put those three tickers together and see the combined price action, it's kind of the broad market. It's large, small, and micro caps. And really, we're putting in what could be a major double top. So most stocks have been struggling. Magnificent Seven put what I call camouflage. They drag the major indices higher, making everyone think the markets are strong. But underneath the hood, a lot of stocks are struggling. They're putting in major tops or hitting resistance levels. And so I do think we could see a huge collapse at any point. We just need some tipping point, some piece of data that could turn the tide and change things around. But right now, the markets are, they're still trending up and they're trying to push. Let me just pull up my chart. And if we take a look at, let's pull up 2025 and 2024. So this is the QQQ. So the NASDAQ 100. The top chart is more or less where we are. I drew this a little while ago. We're testing up right near the highs a few days later. But overall, we had a big sell-off. This was the low in April this year, as you just talked about, Daniela. Well, if you go back to 2024, we also had a sell-off in a market low in April. We also had this huge extended run last year. And here we are, almost a similar pattern where the market is struggling. And it pulled back last time to the lows of April, which was a 15% drop. And this time around, if the market does roll over here, we can see a very simple repeat where the market drops back to the April lows. That's a good 20+% haircut in price. I'm not saying this is going to happen, but it's funny how the markets are kind of repeating themselves. We're on the cusp of some big news. The markets are not very strong. They're getting driven by the Magnificent Seven. But overall, like that's kind of an interesting scenario that's unfolding. I think people need to have a strategy in place. Now, we're still long the equities market, but overall, you have to have a strategy because if this does roll over, you want to make sure you get out. You do not want to ride that down. You want to probably benefit, move to something that will go up. And some of the things setting up for some big moves are gold, silver, and the miners. And we're positioned in some of those because I think they've got some big chart patterns. So that's kind of the take of the cusp of where we're at. But the markets, as you know, always have a way of kind of grinding and pushing higher and sucking people in before it rolls off a cliff. So we just have to see how that is going to unfold going. I think the recent sell-off, obviously, this was you and I talked a few days earlier, so I don't know what the price action is in the last few days, but what we're seeing right now, as you and I are speaking, is I think the Fed decision is starting to get baked into the price. People are selling, they're fearful. They're talking about Magnificent Seven, big techs having huge headwinds. And so that's exactly what we're seeing. If we look on the left-hand side of this chart over here, we got the Mag 7. This is the majority of the market. You can see it's getting sold off with heavy volume. And so I do think it's getting baked into the cake and sell into, people are selling, they're fearful. And then the news is going to come out and people always, as you know, try to front run. They try to beat the news or do what they think is going to happen. And even if bad news comes out, a lot of times we see things rally. It's always the opposite. Trading news is very difficult. As you know, Nvidia, for example, great example, not only meets earnings, but exceed earnings dramatically, but they don't break it by enough. And Nvidia falls, even though it was stellar reports earlier, last year and stuff like that. So you never know. Good news usually gets sold into. Bad news, it's already usually sold going into the news, like right now, and then it gets bought. Bad news gets bought into. So it's always a crapshoot, and really you just have to sit back, let the market do what it's going to do. Make sure you have a strategy to identify, hey, has the trend actually broken? Do we need to get out, or is this just noise leading up to news, and it's just the market trying to shake things up?
What's unfolding now feels less like a random twist in the markets and more like a replay of a script we've seen before, only this time the stakes are bigger. Gold is coiling for what could become a decisive surge, silver is waiting in the wings with its trademark volatility, and equities are walking a fine line between resilience and collapse. The contrast is striking. On one side, a traditional market stretched thin by debt, leverage, and complacency. On the other, hard assets that thrive in uncertainty. If history has any weight, the setup points to a moment when capital rotates sharply, rewarding those who anticipated the shift while punishing those caught clinging to the old trend. The real test now isn't just about price levels or chart patterns. It's about whether investors can recognize the inflection point before it becomes obvious. Could this be the cycle where precious metals don't just hedge the storm but actually become the central stage of wealth preservation? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.